Good afternoon, everyone. Thank you for being here. Before we start, please have a look at the agenda for today, and in the meantime, let me introduce the members of the Wrocław University of Economics Research Team. Joanna Wieleba, Małgorzata Żelazko, Michał Skuza, Kamil Moczulski, and myself, Piotr Ludwiczak. We would like to present the results of our analysis that led us to the conclusion that Bogdanka is currently undervalued. Therefore, we issued the buy recommendation with the one-year target price of nearly 150 Polish zloty, offering 37% upside potential. We identify three main growth drivers supporting our recommendation: doubling production by 2014, strong net income momentum, and continuously growing operational efficiency. Now my colleague is going to guide you through the company's specifics.
Bogdanka is the most efficient thermal coal producer in the Central Europe. The company supplies thermal coal to the power utilities located close to Lublin coal basin, while its major competitors operate in Silesia. Coal sales in the last 3 quarters was equal to 865 million zloty. 85% of it came from the long-term supply contract, which makes Bogdanka sales secure and predictable. At the same time, Bogdanka faces no real competition, as it is the only coal mine in the eastern Poland. The coal is a key to the energetic safety of Poland, as it is the main fuel for power generation. It is also expected to sustain its leading position at least until 2030. However, the domestic production of thermal coal is not sufficient to meet the demand. Therefore, Poland needs to cover coal shortages. For 2011, the import gap accounted for 12% of the demand. That's why we see a great potential for Bogdanka to crowd imported coal out with its double-head extraction, as it is just cheaper. The company, in comparison to the most of its main peers, is privatized. Currently, 39% stake is held by the open pension funds, and the remaining 61% is free float. In 2010, Bogdanka was tried to take over for the new World Resources company. Nevertheless, the offered price was not accepted by the shareholders, as it seemed to be significantly below the fair value. In 2011, Bogdanka joined Warsaw Stock Exchange Blue Chip Index.
In the same year, Bogdanka beat the 2 significant extraction records. First, the world extraction record from the single longwall panel per day, and second, the company's highest monthly extraction volume. In 2012, the lockup for employee shares expired, causing significant share supply, which surprisingly was followed by the increase in the share price on the first trading day. It seems that Bogdanka is a very attractive investment, offering growth potential, which has begun to be discounted by the market. Now, let's focus on major company value drivers. First of all, mainly due to its modern technology, Bogdanka is the most efficient coal mine in the Central Europe. It outperforms the Polish industry in terms of extraction efficiency more than 4 times, and considering labor efficiency 2.3 times. Besides modern technology, high efficiency is supported by low, as compared to domestic competitors, extraction risk due to favorable mining conditions. Additionally, we perceive management as experienced, qualified, and aiming at long-term value creation. We distinguish 4 core growth factors. First of all, Bogdanka is going to double its production level by 2014 and increase its market share twofold to 18%. Second, even though Bogdanka is already the most efficient coal mine in the region, it invests further to boost efficiency even more. Third, economies of scale will be achieved due to investment in new coal fields, Stefanów. And fourth, management identifies further organic growth possibilities by exploiting new coal fields in the future. All of the above-mentioned drivers strongly support our buy recommendation.
Now we would like to present our evaluation concerns. The discounted cash flow method assumes specific free cash flow to the firm estimates up to 2016, since we expect all the major shifts to be accomplished by this year. We forecast significant revenues and gross profit increase due to higher extraction volume and declining unit costs. That in turn is caused mainly by the investment in additional coal field. As the company operates under long-term contracts, its sales are highly predictable. We expect EBITDA to increase by 28% CAGR until the end of 2016. We also assume that Bogdanka will not pay dividend in 2012 due to high capex requirements. However, a great portion of net income will be distributed to shareholders in the following years. The discounted cash flow analysis led us to the fair value of 137 Polish zloty. Furthermore, we have conducted peer valuation based on price to earnings and EV to EBITDA multipliers. Currently, Bogdanka trades at higher multiples in comparison to its peers, at the same time offering lower volatility and higher revenue growth. We have selected 7, in our opinion, most relevant companies from Central Europe, United States, and Indonesia. Bogdanka has no perfectly similar peers, and at the same time, it outperforms the selected companies in terms of efficiency and profitability. We believe that an 18% valuation premium that the market has been subscribing to Bogdanka is therefore well deserved. In conclusion, we arrived at the fair value of 118 Polish zloty. Combining two valuation approaches with assigned weights of 70% to discounted cash flow method and 30% to multipliers valuation, we obtained the fair value of 131.16 Polish zloty, offering 20% upside potential.
Let's now discuss some financial data. As you can see from the slide, we expect significant increase in return on equity from 7.5% in 2011 to nearly 23% in 2014. Increasing net profit margin, as well as growing sales to asset ratio, are the main factors of this improvement. Additionally, we would also like to highlight Bogdanka's high earnings quality. Now, let's take a look at the major risks. We distinguished 3 main groups of risks. First, operational risks. The most significant one in this group is the risk of losing key customers. It is, however, to a great extent limited by extremely high switching costs. It's also worth mentioning that labor union risk, which usually plays a profound role in mining companies, for Bogdanka has historically proved to be rather insignificant. Second, economic risks. We consider this group to have the smallest impact on a company due to the lack of good substitutes for coal, as well as defensive nature of the thermal coal industry. And finally, political risks. It is the most influential group, as current policies aim at decreasing price competitiveness of coal-generated energy and in turn for switching from coal to alternative fuels. In addition to the risks the company faces, we identified 3 investment risks. First, since Polish capital market develops quickly, the increase in the number of investment opportunities might result in a temporary decrease in Bogdanka's share price. Second, in the event of the global market turndown, foreign investors might lower their exposure on Polish market, pushing Bogdanka's price down. And third, an upside risk. Given Bogdanka's attractiveness as well as its relatively high free float, the company might again be subject to a takeover bid, offering a controlled premium for investors.
We also assessed the sensitivity of our target price to selected inputs. The analysis indicated that the most influential factors are the residual cash flow growth rate and the extraction volume estimates. Finally, we conducted Monte Carlo simulation on our discounted cash flow model. Please notice that it exhibits relatively low price dispersion and the current market price is about 2 standard deviations below our assessment. We therefore believe that the market is still underestimating the free cash flow generating potential of the company. As we deem our valuation very precise and rigorous, we strongly believe that the existing price gap will be filled by the market in the nearest future. We would like to highlight that since the issuance of our report, the company's price increased by 16%, which is the best proof that our recommendation was adequate. Thank you for your attention. If you have any questions, we will be glad to answer all of them.